Hey, what's up guys, John here. 93% of all home buyers regret their purchase over the last couple of years.
Buyer's remorse is starting to hit many new homeowners who rushed to land a house during the frenzied market that we all saw during the pandemic.
Why is that? Well, they think they've overpaid for their properties. They did not take into consideration the high cost of insurance and taxes and upkeep compared to rent.
More and more homeowners are abandoning home insurance because of skyrocketing costs.
And so when you're looking at these stats and the facts of what's happening, you have to ask yourself, is it just the everyday middle-class American that's going through this, or is it the rich? Well, I saw a clip of Josh Altman, $1 million listing guy. He was talking about what his home sellers and home buyers are dealing with, the 10, 20, 30, $50 million properties, what they're going through right now. And what they're going through, and I'm going to show you the clip, is very similar to what everybody else is going through. They're suffering, they're struggling.
When your fire insurance is double your mortgage payment every month, that's a big issue.
And I think what we're going to walk into very soon is a game of tug of war, trying to hold on to that property, but the economy is just pulling and pulling them. And before you know it, you're going to start seeing these people fall into the mud. And that's what's about to happen in this housing market. It's going to be unreal. It's going to be worse than 2008, 2009 for many home buyers and home sellers. And it's going to be an incredible opportunity for new investors that want to go out there and pick up deals. Because I think what we're going to walk into, it's going to be unreal. I'm going to break it down for you. I'm going to show you the facts, show you what's happening. You form your own opinion at the end. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's going on in America's housing market. And if you'd like to fix your credit to position yourself for the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Book a call for tomorrow, Monday. We'd love to give you a free strategy session. Take a look at this. So, majority of Americans regret buying a home, more than half in worse financial shape. 93% of home buyers regret their purchase. Like 93%. I mean, that is such a massive figure. You look at this. They say right here, a total of 93% of recent home buyers regret that purchase, right? 56% of recent home buyers felt like they've overpaid. They're over their heads financially since finalizing their own purchase, and 93% regret about their purchase. And right here, it says that 63% of first-time buyers think they've overpaid. You think about this. First-time buyer, how much is the average buyer putting down for their first-time home? Well, the answer to that is 6%. 6%. And the cost to sell a property, if you were to buy a property today and sell a property tomorrow, would be about 9%, 5 to 6% for realtor fees, transfer taxes, closing costs. So you think about it, they're over their heads. They're already underwater on their purchase from day one if the property does not appreciate. And so you start to think about what's going to happen here. As costs continue to rise for these homeowners, they're not going to be able to qualify. They're not going to be able to maintain their payments because you think about it, they qualify for the purchase based on the current debt to income levels. And if the debt levels continue to get more and more expensive and their income does not rise with it, problem happens, right? Look at what Josh Altman said. Look at this.
It's near impossible. And yeah, when your fire insurance is double your mortgage payment every month, that's a big issue.
You think about that. Double your mortgage payment. Here's a good example of this. Fortune magazine. They say here that there's a survey of a lady going what she's going through right now with her husband, saying that their annual premium went from $1,200 per year to $9,750 per year. You look at what people are going through right now. They're searching late payment mortgage at levels in which, I mean, this is way worse than 2009, right? People searching for this. People looking for home equity line of credit. Google Trends hitting levels never before seen. Why? Why would people do that if they have these 2-3% mortgages that they never want to let go of? Everyone's posting all these memes online about, how you feel when you have a 2 or 3% mortgage and everyone else is, getting a 6 or 7% mortgage. The mortgage rate is important, sure, but the price in which you pay determines the quality of the deal. You make the money on the buy. If you don't buy right and you have a great mortgage rate, who the hell cares, right? Who cares? You want to buy and you want to lock in the right price on the purchase. And a lot of people did not, unfortunately. So the effective outstanding mortgage rate is currently 3.7%, less than half of the current mortgage rate. A massive 22% of borrowers have mortgage rates below 3% right now. Just 9% of borrowers have a mortgage rate that is above 6%. That is why the housing market supply is 40% below the historical average. It is also why the average number of new homes selling for less than the existing home, right? Now, look at this. Look at this. According to official inflation data. They say that over, from January 2020 to where we are right now, December 2023, that we've had about 19% inflation collectively over those 3 years. That is the numbers in which they are giving, 19%. So if you're making $100,000, you do the math. Your purchasing power everywhere is getting eroded dramatically. But what other people are saying is, no, actually, if your earnings have not increased or risen by 34% from January 2020 to October 2024, congratulations, purchasing power of your labor kept pace with higher costs. 34%. So you think about what this means for people that own properties, that purchase properties, that they cannot get access to home equity lines of credit or second mortgages or any type of credit lines on their properties because they don't have equity. It means that they're sitting there hoping and praying that they're going to see a Fed pivot, hoping and praying we're going back to 2018, 2019. I think you know, and I know, we're not going back to 2018, 2019. Things are going to get much, much, much harder. And so, when you see pending home sales drop to the lowest level in 20 years, home buyers, they're not out there waiving inspection contingencies and appraisal contingencies, desperate to get the deal anymore. It's just not happening. Because home buyers, they're looking at the writing on the wall saying, you know what? It's a lot cheaper just to rent, 52% more expensive to buy. Why would I buy and spend 52% more than what I could pay for rent and not have to deal with the upkeep, the insurance, the taxes, because taxes, everything's going through the roof. Here's a really good example of this. In Vermont, I just typed in property tax increasing, 18.5% increase in property taxes what they're proposing, right? 18%. This is just one area, but a lot of areas have seen substantial increases in property taxes, Texas, a lot of areas. And with that, insurance is continuing to get more and more and more expensive. Costly disasters sent Texas homeowner insurance rates skyrocketing this year, up 22% so far in 2023, right? So now, sure, you've seen a lot of people move to Texas, a lot of people move to Florida, a lot of people move to different locations and buy these properties. But you and I both know that they paid a pretty penny for these properties, and they didn't take into consideration the rising cost of everything. Now, what I think is going to happen, I think that we're going to see a situation where they're going to start walking away from these properties. Because what do people do in an affordability crisis? Seriously, what do they do? If they're making $100,000 a year, call it $8,000 a month. Making $8,000 a month, and maybe their mortgage is $3,000, right? So they're left with $7,000. They have to pay Uncle Sam. Maybe they pay Uncle Sam $2,000 or $3,000, right? So maybe they're sitting there with $5,000. Then they have a car payment, $729 a month. Then they have upkeep on their property, car insurance, gas, food. Everything is just eroding at their purchasing power. They're going to say, you know what? For $100,000 a year, for $8,000, I might as well just go rent for $1,500 and reduce my cost $2,000 a month, $2,500 a month, and not deal with the property. You're going to start seeing a lot of people being forced into those types of situations. So the situation that somebody wants to be in, if they want to get into real estate, is to likely buy in one of these areas that are deemed, quote unquote, high risk, but buy cash, pay cash. You're going to have a smaller pool of people trying to buy into these neighborhoods, likely going to be really, really nice areas that, either coastal communities or, Mulholland Drive, as Josh Altman mentioned in that video, areas that were deemed as high fire risk. These areas, you might walk into a situation where there's not as much competition to buy, right? So if there's not as much competition to buy in a high interest rate environment, high cost to borrow money, you might be able to go out there and buy a home today that's worth, $500,000 or $600,000. You might be able to go buy it for $200,000, $250,000 in a year or so, as the economy gets worse and worse and worse. So if you are putting yourself in a really, really good situation with a good business and a good strategy, you might be able to go out there and buy a great property, no mortgage, self-insure it, and just pay the property taxes on it, right? So I think what we're going to start to see here is we're going to see the rug being pulled on the American housing market. We're already starting to see it, and if you look at this, for example, interesting trend here, July 2023, 646,000 active homes in July, right? August, 669,000. September, 701,000. October, 737,000. And November, 754,000. Why, in any healthy housing market, is there more homes for sale in November than there are in July? When do you see that? You don't see that. What you're going to start to see is December is probably going to see an uptick, and January is going to see an uptick, and it's going to become more and more and more of a situation where sellers are chasing home buyers and not the other way around. I believe if you position yourself very, very well throughout 2024, you're going to be able to absolutely crush it at the end of 2024 and 2025, and you're going to be able to make life-changing money in real estate. We witnessed the greatest real estate bubble that was built up due to these horrible policies that were enacted over the last few years. 0% interest rates, money everywhere, all of these loan programs, everything that was happening. All of this fueled a massive bubble that's getting ready to pop. What do you think about this situation? Drop below. We'll have a conversation. If you'd like to fix your credit to position yourself, what I think is going to be a massive investing opportunity across real estate, even buying companies. I think there's going to be so much opportunity out there for the smart and the prepared. If you need help fixing credit, we'd love to help you. We'd love to give you a free strategy session at the very least at GreatCreditFast.com. Book a call below. We're available tomorrow. We'd love to help you. Hop on a free strategy session for you tomorrow at GreatCreditFast.com. Book a call, and I'll catch you in the next video.